This region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
There's a lot of self-proclaimed geniuses out there that know the national yield, but they're all wrong.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
That's what brings the viewers back. That a boy.
Good morning, everybody. It's Wednesday, November 26th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area. I'll be sure to get to it during the show. Overnight markets here, December corn up 2.5 at 426. January soybeans were up 2 1/4 at 1127. And December Chicago wheat was up 3/4 at 528. No export sales announcements here this morning, so we'll jump right in. I guess what we know, a lot of rumors floating around that China was in for 10 to 12 cargoes after that Xi and Trump call the other day. Interesting enough not to see any announcements here this morning. I was kind of surprised as I was digging through. So we'll have to keep an close eye on that. We could be getting close to a peace deal between Ukraine and Russia. It seems like we're as close as we've been in quite some time, but certainly things can fall off the rails as we've seen. So as we go into, kind of the longer weekend, it could be interesting to see how that shakes out. And then obviously, as we've talked about a number of times, got first notice day coming Friday. Today's last day to roll for the long side. And so with that, Dustin, why don't you kick us off, share a few thoughts here as we go into, first notice day, kind of shortened trading session on Friday, and give us some thoughts there.
Yeah, we have seen some weakness in the spreads. Anything goes today. It doesn't have to be that, the growers and the longs that need to roll or sell, don't necessarily need to be the ones that move the market. There's two sides to every contract. But just, you think about kind of control a little bit here. Shorts really don't have the risk of being, forced to do anything. The longs technically have some risk of delivery. We'll see. I think that the market has been especially strong considering the size of crop that we are supposedly holding. I talked about this in the letter last night. We should be well over 1 billion bushels as of DC1, more than last year, even with increased usage. So, where's all the corn, I guess, is the question. Is it just that growers are steadfast and they're not selling because they're not, ready for the price yet? And it's just that's matching up to a very aggressive buyer. It could be that simple. Or it could be that the yield is not nearly as high as the USDA is projecting. We maybe see more market signs of that. That's a possibility too. But I just go back just in the last few years of thinking about what's really transpired. And it's that we've had bouts of strength, early on in the season, followed by, at least support in some of those years, support or strength, followed by aggressive selling as you get to the very tail end of these contracts. So Feb first notice day, or for the March contract, late Feb, that's been a particularly weak period of time. And the August first notice day been a very weak time. So why does that happen? Any contract that gets the can kicked down the road, if it's delivered at harvest and put on a basis, a lot of times that might not be sold until after the first of the year. And the real forced delivery time frame or forced sale time frame where everyone kind of needs the money and they're getting out of the position happens sometime after the first part of the year. So that's the March expiration, right? That's when if that sale has not come through and it's still on paper, the commercial is asking them to roll or sell. Seems like we're getting a lot of selling then. And then the same thing, of course, for August. It's either coming out of the bin to make way for the new crop year, or it's just the end of the line for that paper long, DP contract that's still sitting there. It has to be moved before the end of that September contract, first notice day. So if that's the case, then we're set up, in my opinion, we're set up for like the mother of all basis contract years again, if we're anywhere close to that yield situation that we're talking about. So we're talking about record demand by a long shot and still at a 2.1 billion bushel carryout. There is no shortage if Brazil has a normal weather pattern April, May, in my opinion. Unless demand is just going to continue to vastly outsurprise what we're expecting globally. So just some food for thought. I think today will be a good tell day, just how today wraps up of like where contracts stood, what automatically gets rolled. And then of course the Feb first notice, end of Feb first notice date for March will be another big tell day, I think.
Yeah, I don't know if I just got to change what I'm getting excited about in life or whatnot, but it feels like I'm waiting for a package and I look every morning at export sales for an announcement and I'm not getting it. And you hear these rumors of sales after sales and it's not coming. So I don't know, Justin, it's, we're not getting any younger here.
Yeah. Yeah, I mean, if 10 cargoes traded, you should see something, right? I mean, it's really hard to sneak under the radar. Not that they haven't done it in the past, but good news is we'll find out sometime in January what we sold yesterday, I guess. That's been frustrating. But, just going back to Dustin's comments a little bit on corn, I think just one caveat I would put to that, it's available supply. So you talk about if we have big yields having this many more bushels, but those have to be willing sellers of those bushels. So when you have such a big export market on right now, up 60% year over year, it's kind of offsetting that available supply. And I think with all the talk about farmer aid, China deals, I think there's plenty of bushels that are just willing to wait and see. Personally, I think there's a little bit more patience. Now, does that all change after the first of the year, which is, reality kicks in a little bit about cash flow needs and loan renewals and all the things that we kind of pushed aside deep down in our bellies? That is still there. I kind of think so. So I actually think things make sense here. I think I said that yesterday. Yeah, big supply, but not as many willing sellers. There's too many promises of we'll take care of you. PLC, just name it, right? There's so I think once we get a little more clarity on that, see a deal actually gets done. I mean, I could even argue that Chinese prices of corn prices continue to rally as they're releasing stocks. So I mean, you could just have a big demand market globally in corn. We talked about this for years, how stocks to use was relatively tight globally. Now we had a big crop here, but there is, last year's demand was, I think, surprising to a lot of people and kind of attributed to like a 1 year, Mexican buying thing. And now we're on year 2 and it's way bigger. So I'm just trying to be I'm just trying to be open-minded, I guess. After first notice day, like I said yesterday, if you were bullish here, you've broken down into the big moving averages, the big trend lines going into first notice day. If you were a bull, you would buy half today, half Friday, and see if it works. Personally, so I would be, if you're bearish, I'd probably be flat for a day or two, see how it acts. Just because it's the level you should buy it if it's a bull market still. Beans, I think. Dan, to your point, it's tough, right? They're kind of running out of time on, you got to start seeing some more demand because our demand numbers are overstated if we're not going to start picking up dramatically here. Now, maybe they wait till there's actually a deal signed. Some of the verbiage that's coming out is like, they basically agreed to buy beans, versus a specific amount that came out earlier. So market's probably a little tired from there. And then my last comment was going to be, I think it gets interesting as you look towards the new crops, because I think corn, even if we have we hit the demand numbers and have a 2.1 billion carryout, I think you start looking at new crop, and that's just kind of where I think is interesting, like these 26 forward. I think there's going to be at least a 4 million acre switch unless prices do something, dramatic, like a 2:1 to 1 ratio or something. I think it's just such a big thing to fight this many acres to not have a decent amount switch back. So those are kind of the things I'm looking at.
Yeah, and we joke a lot, and I know that there's not a whole lot of wheat guys that love wheat in this group, it certainly. But it's interesting if you got this peace deal done and Ukraine and Russia kind of shuts off. I mean, you've been kind of in a bear market throughout the whole run through this war. Like, how could, in your opinion, Justin, the outcome be bearish? Or is it like what changes there from a global perspective?
Well, it's interesting, right? Like, we obviously, when the conflict started, we had a massive wheat rally, right? Because there's so much wheat grown in those regions. But they were able to still grow pretty good crops. Russia has been a super aggressive exporter. So if it wasn't the fact that we've just been in a bear market forever, you would say a deal like this would be bearish. But I want to be friendly wheat. It's just so hard to do. I would say, like, the last couple of weeks, it's old data, but we were doing pretty good wheat business, back in October. I don't know what it's looked like since. We haven't seen a ton of announcements, maybe a couple like white wheat or I think hard red spring wheat, a couple announcements like that, but we haven't seen aggressive wheat purchases announced, at least. But the weekly numbers were, 650, 700, numbers like that were above estimates. So maybe just all of our things have gotten just cheap, and 420 isn't what 420 was in corn, and 520, maybe we're just undervalued. I mean, we've talked about, cost push inflation for years. Maybe we're getting to a point where it's just so cheap relative to everything else that it's just a value buy for enough people.
Yeah. Does anything globally change in the corn space with the conflict, Justin, in your opinion? I mean, I know that, from a Ukrainian perspective.
Well, I mean, if they start ramping up again, it certainly, they've cut back acres and it's stymied their growth. But I mean, remember, that whole area was just, for corn, wheat, you look at that in South America, just a constant headwind for us when they are kicking on all cylinders.
Yeah.
So
that's gonna be interesting.
I don't think it's bullish. Let's put it that way. I don't know how you'd spin it bullish, but
yeah. Ben, why don't you put a bow on it for us here?
I think that soybeans are kind of the flux capacitor, if you will, of the grain market right now. If we can get this business, and I know we talk about traditional export windows, I think in a situation like this, you have to kind of open up your mind to say it doesn't necessarily have to be in traditional export windows. We need to see it. We need to make soybeans, make corn work hard. We're coming off 2 record crops, one in the southern hemisphere, one in the northern hemisphere for corn. And here we are with global stocks, not at all burdensome, right? Kind of tight. And there are a lot of end users in corn that were shocked that they had to pay $4.30 to $4.40 for corn in October. They were waiting to get it. I'm sure some people bought it when it was down there. But I think soybeans are kind of what put us in this position, from the grower supply rationing with lower acres after being really dinged up in the previous trade war. And corn is going to have to lose some acres to soybeans, and it puts everything back in a much more balanced state, and maybe gives us a little more opportunity than we saw in the past year, because we spent most of that year with zero hopes of our biggest customer buying soybeans, and consequently the massive amount of acres that we planted and a large yield, right? Whether it's 186 or 180, it's a record. So I think that balance is important, and it kind of takes the shackles off these markets if we can see that bean demand materialize, on at least off the 25 crop, because we did supply ration it. So I think that's where the focus is at. I think Dustin made a great point. This being first notice day, we don't have to go through this again until March. I think the grower is in the mindset of, I don't think it's 186. I think we're doing a lot of business. I'm willing to roll it and give myself another 4 months and see where I wind up. Not sure that is, you don't know if that's right or wrong, But when you're looking at these March at 15 cents and you could buy the at-the-money calls in March for 13 and a quarter, you might want to think about how you play this, because maybe we find out that it is 186 and demand is disappointing and corn is just a wet blanket forever. So just some things to consider.
Very good. We're just going to be coming into the open here. Rye, cash picking up in livestock here and kind of a light choppy trade for hogs. So what are your thoughts here as we start the day?
Yeah, I think we're seeing a little bit of short covering here ahead of the holiday. I mean, we did bounce yesterday, but yeah, cash market's still weak here. You got northern trade around 208 to 210, and 215 in the south. So we're looking at about $8 lower, and that all just kind of comes on the heels of all the headline trade this week. And I think just the market's still pretty cautious here, going forward, just because of that reason. So just looking at some of the numbers here. I mean, we got option expiration coming up the Friday after next, and there's a lot of open interest on the put side of the market that is deep in the money right now. 230 puts, 220 puts, and the largest strike 210. So it feels like that's kind of where we're trying to gravitate towards, to be honest. It just feels like you broke so hard so fast, and December contract's going to have a lot of motion in it just over the next several weeks as we kind of get into first notice day. So something to keep an eye on, I think, is just that kind of open interest in those options and where we can usually gravitate towards. And I'd say that's probably the spot. But like I said, there's going to be a lot of shorts that are in the money right now if we're going to stay at these depressed prices. So it could make for a pretty interesting spread trade as we kind of get into over the next 2 weeks. So it's just something to watch there. And then on the hog side of things, a little bit of a short covering rally as well. Cash market actually quoted higher. I mean, we're 73 and a quarter. It's up 261. Sadly, carcass prices still lower here, but just feels like overall you got a decent chunk of short covering before the holiday. And we still have trade on Friday. It's just shortened hours. So it just feels like you get a lot of money moving around here today versus on Friday. So we'll see what happens. But generally speaking, hopefully a little bit more short covering in the meats is what we're looking for.
Appreciate the update there. Just came into the open. December corn's up a penny here, 424.5. January soybeans are down 3/4 at 11.24, and December Chicago wheat's down 1/4 at 5.27. A couple things to point out. Again, markets will be closed tomorrow for Thanksgiving. We will have a hard reopen at 8:30 on Friday, and we will close at 12:05 Central on Friday there. So please, if you need anything, don't hesitate to give us a call there. Also on Friday, it's post-Thanksgiving Fun Fact Friday, so we never know. All bets are off for Brian on Friday. We'll see how that shapes up. Also, we'll get our second export sales report of the week. It'll be from a while ago, but we'll still have a little bit of data there. So again, appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. Doesn't cost you anything to do so, and it'll keep you up to speed on everything that's going on with AgYield. So again, thanks to everybody that supports the show. We're doing this live every day that the markets are open on X, Facebook Live, and YouTube Live at 8:15 Central Time. We hope everybody has a great day. We hope everybody has a wonderful Thanksgiving. Enjoy yourselves. Be safe. And we look forward to talking to you again on Friday.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.